Good afternoon, good morning, ladies and gentlemen from Austin, Texas. My name is Matt Leshper with 1836 Property Management, as always, in beautiful Austin, Texas. Today we are here with Stephanie Winans, uh, agency owner for Winans Integra Insurance. I have to get all that correct since I'm used to saying my own title. I'm not used to saying everybody else's title. In my company, or 1836 Property Management, we manage single family rentals, duplexes, triplexes, things like that around the Central Texas area. And our video today, or our crowdcast coming to you, is on the topic of homeowners insurance for real estate investments. Very specific niche, but very important. And there are so many misunderstandings about this. We really wanted to bring it to the forefront and let an expert talk through it with us. So, in just one second, I'll introduce Stephanie. In the meantime, if you guys have any questions during our presentation today, there is a button at the bottom that says Ask a Question. Feel free to pose that, and we'll do our best to answer it either if it's on topic or at the end of the discussion if it's something we need to elaborate on a little bit more. But welcome. Thanks for joining us today. Stephanie, thank you for joining me. Thank you for spending time with our clients. They really do need your assistance. I know now everyone thinks they can WebMD and Google themselves into any answer that they want. If they just ask Siri, well, they don't actually need humans anymore because they know more than everybody else. And that is super dangerous. So this is going to be one of the biggest investments of their life. They need your expertise. Tell them a little bit about who you are, what your background is, what your agency does.
Yeah, my name is Stephanie Winans. I'm the owner of Winans Insurance. Like Matt said, I have been an independent insurance broker for almost 4 years now. I worked for a major large corporation for a little over 4 years and broke off to be an independent broker. What that means really is that I don't work for any one insurance company. I really work for my customers. So I am shopping to find you the best rates for the most competitive coverage for the correct coverage. Every risk is different. And so there's questions I ask to make sure that, hey, you're not going to get with a carrier and then they're going to cancel you in a month or 3 weeks from now, or something's going to come down the line. That's really annoying for everyone and especially for the customer. And so, yeah, what I basically do is I'm your liaison to insurance companies. I am also the insurance company's customer. So that helps too, that I make sure that I'm only writing with companies that I trust, because there are situations where companies can change in their claims situations or coverages or mostly competitiveness within a certain area or state.
And you do what all lines do you write? How wide is the areas that you?
I really write mostly personal lines. And even though home investing is technically a business, if it is under 4 units in any one property, so like up to a fourplex, you still have it is still a personal product. It does get a little gray area, which isn't my favorite word, but it's true that if a property is owned in an LLC, a lot of personal lines companies will let you insure them as an additional insured. But if it is a personal product, the check for a claim has to be made out to a name, not a company. So it gets a little different. And I know probably a lot of your customers do maybe have some properties owned in LLCs. I work with that all the time. It's a lot more expensive to get a commercial product. So I like to talk to people and just understand who's in this LLC. Is it more for a liability issue? Is it one person, a married couple, two people? When you get up to where there's 15 owners, yeah, that is more of a commercial product, but most of the people are doing it from a liability standpoint. And so when they understand why it's better to get a personal lines product, than a commercial, especially the money, it is more expensive. And so we just talk to people about risks, but mostly I do personal lines, home, auto, and what I like to call toys, RVs, motorcycles, etc.
Boats.
Boats, yes, lots of boats.
Big boats around here. So,
Mhm.
all right. Well, that kind of went over a lot of things on what you do. Today, we're going to talk about the homeowners insurance coverage and costs. That's one of our topics. I know there is a difference between homeowners insurance, home warranties, which I don't believe you are involved in.
No.
Good for you. Don't do it. And additional coverages that should be included. I know we've all heard of things recently regarding floods, but what about mold coverage? What about all these things that you don't think of it until you wish you had it? And that's
Exactly.
really why I think we want to talk to someone like yourself, who is an actual human that is part of the community, that is going to be here in front of you, because you can get coverage online. I mean, they've even got apps now for coverage. The problem is when there's a problem, because that app doesn't really care if there's a problem. And if it's really super easy, it's probably not that in depth. So let's jump into our first topic: typical homeowners insurance cost and coverage. Now, we're using the term homeowners insurance, but really, this is a investment property. So let's discuss what's included, the associated costs, difference in coverages between investment property insurance, renters insurance. You could go on for an hour with this, I'm sure, but let's at least just get it started and take the first one of those.
Sure. So there's a lot of different forms of home insurance, and they're all a different form. Home, renters, landlord, they're all home and condo, right? They're all home policies. It's just on a different form because they cover different things. Renters insurance has the least amount of coverage. Really, you're just covering the liability that something goes wrong and someone you invite over might sue you or the homeowner, which is important to have. And then, really, your personal belongings, and then you really don't get a lot of choices on homeowners and or on renters, excuse me, and they, they're pretty much straightforward across the board. But that's not really what we're here to talk about. They all range within like $10 to $15 a month. I mean, it can go from there based on how much personal property coverage you have. That's really the big thing. Is the two things you get to pick on renters is personal property coverage and your liability coverage. On a standard home policy as a primary, secondary property, right? Like you're not renting it out to others. Now, maybe you are with Airbnb. That's a whole different story. But you're not typically renting it out to others. You get to pick a lot of things. Your personal property is typically a percentage of what the dwelling is set at. So it comes with a standard amount. Different carriers, you can fluctuate this up or down on a scale, but majority of them give you 50% of personal property at whatever your dwelling is set at. Then it also assumes that you are living there, so you care the most about your property versus someone else. It's like, I don't know, I just pay this person money maybe, and I don't really care that maybe I saw some water damage on the ceiling, etc. Right?
Yeah, they don't report it.
Or I'm not quick to report it.
Fair.
Then the third one, condo is a little different. Condo, there are people also that do rent out condos. So it studs in coverage because a master policy is covering the outside walls, roof, foundation, common areas.
Right.
And then really what we're here to talk about is landlord protection, which are known as DP3, DP1, and DP2 forms. I only write DP3. We'll get into that in a second, but it's just a form of a home policy. It's still a home policy. It does not come with standard personal property coverage because they assume that likely you're not going to have everything you own, every candle, spoon, sock, dish towel in this property. So you get to determine that amount. It also knows that you are not going to be living there. You're going to be renting it out, either in short-term or long-term leases to someone else. It's really hard to say the cost difference. We don't know until we put it in, but I would venture to say anywhere from 10 to 20% more is the cost of a DP3 versus an HO3, which is your common primary, it's your primary homestead or secondary property for you. Again, it can sometimes be $5. It can sometimes be $20. It can sometimes be $400 more. It really just depends. There's so many factors that go into home pricing and areas and things like that.
Okay. So one of the things you mentioned was no personal property coverage on the landlord policy. And the reason I want to mention that is because we have a lot of first-time landlords that come to us and they go, "Oh, but we have these 5 different things of personal property we want to leave there because someone will love them." And we get into this battle where we say, "Nobody loves your stuff like you love your stuff." And everybody has their own stuff now because welcome to America, where you get Amazon stuff. So we always tell them to remove it, but either way, it's not covered. We say the same thing. We don't cover personal stuff.
It's not covered. and this we're gonna talk about this later, but this is a great point to bring up. It's not covered unless you put an amount on there. And I always recommend putting some amount on there because what people do not or people forget is that appliances do fall under personal property, even on your primary home policy. So you do not have to have coverage for it. Maybe it's an old oven or a fridge, or you're like, I've been meaning to replace it. So maybe you don't want it on there. What I typically recommend is get the quote with it on there and then choose to remove it. It's usually less than $50 a year. And so what happens though is the home was to burn down, you would not have coverage from your insurance company to replace washer, dryer. Maybe you have that, maybe you don't. Fridge, oven, dishwasher, microwave. Those are the things I talk to people about. Hey, let's put a couple $1,000s on here. You can see and then choose if you want it or not. But that's the most important factor people forget. And sometimes they do have partially furnished places. And that's where we do want to talk about, hey, you've got 4 beds in here, you've got couches, you've got these things. Are you okay to not have any coverage, or do we want to put a couple $1,000s on there in case they are lost or damaged? Damage is a different.
Absolutely. So I'm going to do my best to keep us on track today,
Okay.
and hopefully we won't miss anything. But if I miss something, you feel free to point it out to me as well. We don't want our listeners to miss out on anything if they're investing the time. So let's talk about a couple nuances on the investment property insurance, because we get a lot of pushback on a few things. One, which is not on our list to talk about today, but I'll throw it out. And if you don't have it off the cuff, that's okay. We won't hold that
Okay.
against you. Is we and all Texas management agreements ask the owner to list the property manager as additional insured.
Mhm.
And some agencies to first time buyers go, we don't do that. They should never ask that. And they take this moral high ground with it and they push back and they're horrible. But this is a standard practice. And I can explain why on my side of the table it is, but I also don't want to take that away from you because you may have a completely different opinion. And I'd like to be able to share both of those with our viewers. So what are your thoughts on listing a property manager as additional insured?
It's really the customer's choice and how whoever they want listed to have access to the policy. That's the biggest thing. If someone is not listed on the policy, you cannot call in and make a claim. Now, if you are an additional insured there's 2 different areas on how to list people. There's owners, right? So you can have up to 2 people listed as owners. They are the people that own the policy, own the property, and you really do need to have some sort of, I don't know, some sort of reason to be listed on there.
Of course.
But it could be for different things. Like sometimes we've got family members that also help manage something, or they're closer, or there's some sort of issue. If you want to list them on there, let's do it. But just know they have access to do things to your policy
Yeah.
as first or second insureds.
Mhm.
An additional insured is almost listed like a mortgage company. Okay. So they're listed in a little bit of a different area. And so they do not have access to change your policy or cancel your policy.
Correct.
They do have access to know if your policy is expired, which is really the main thing the mortgage company wants to do. And they have a little bit more access in a mortgage company. A carrier or company can just call to say, is this policy active? They can call the carrier, right? They usually don't. They usually call me or you or someone else. But they do have that access to say, is this in force? As an additional insured, the carrier's openness to let them do certain things varies. And I can't tell you every single thing, but they can sometimes work with the carrier to manage a claim, which is
Right.
really important because let's say you live out of town or out of the country and you're like, I can't deal with this. There's a huge water claim and they're talking to the tenant and you don't really talk to the tenant directly. It just gives them access to say, hey, here's what's going on with this claim. If someone asks me to do it, I'm gonna do it. It's what they want, but there's no perfect answer to say someone shouldn't or should not have access. You just need to know that they do have access to your policy, really in the claim situation. They cannot cancel it or change the coverage. Those are either the first or second named insureds.
One of the big explanations that we share with people is because of the liability coverage on the homeowner's policy. That homeowner's policy takes primary space, if you will, if there is a liability claim. Now, if my company is liable, that insurance coverage would come after my company, and then before we have secondary insurance.
Sure.
But every property is owned by an owner, and that owner is responsible for covering the property with insurance and things like that, as well as repairs and everything else. Now, whether a tenant does damage and they have to then sue them, or there's other damage and they have to go after them, but the owner is always responsible for that property. And therefore, if I had to cover everyone else's property as primary, I could do it. I would just have to charge you the equivalent of the insurance, which you're already paying for.
Right.
Yeah, so that's the reason that we do it on our side. And some people get it and some people kind of get up in arms about it. But it is a standard practice because otherwise I would have to cover other people's property, which is not cost effective when you're already paying for that coverage. So, talk to me about the difference between. Um, Tell me if a tenant damages a property. This comes up with investment properties all the time. So we've got two different situations here. And if you disagree, I would love the pushback because I want to get it right. I don't want to get it. I don't want to get it my way. I want the expert
Sure.
you to explain this. We've got two scenarios. One is the kitchen fire. It was an accident. It caught fire. Let's just say 10 grand in damage, but it happened, right?
Hmm.
Second is a tenant moves out, but did 10 grand in not normal wear and tear. They changed the oil for their motorcycle in the living room on a wood floor.
Okay.
I mean, so both are different scenarios. So talk to me about each of those and just how that would, you could say, okay, they punched holes in the wall, same thing, right?
Sure.
Or
Okay.
balance.
So one is really easy. The first one, fire, it's going to be covered under your policy. Now,
Uh,
you're going to be responsible for your deductible. Typically, that's going to fall under your all other perils deductible. Um, it's sometimes just written as general deductible. In Texas, it's the deductible that is not listed as wind or hail. So most common under that's fire, theft, and water damage. So um, theft is a little different on, I mean, is someone going to steal the fridge? Probably not. But, you do have that coverage. And I don't know that you would want to claim that, but that's a
correct,
whole scenario. But
correct.
fire, yes, super simple, right? Accidents happen, unfortunately, and that's covered. Vandalism and just being annoyed sometimes by maybe how a customer treated your property is the largest gray area in landlord insurance. There are certain carriers do have additional endorsement coverage for vandalism. It's something you may want to look at, but you may decide, I don't want to pay for that, right?
Correct.
So I can't tell you what the price is. It varies greatly. And vandalism more is I do not know, and I don't want to speak to 100% accurate, but because someone did change their oil in the middle of the living room, I don't know that that would be classified as vandalism. Vandalism is a lot more like spray painting walls. We've probably seen all of the scary things if somebody got mad at somebody and spray painted the walls, the fridge, threw paint everywhere. That's clear vandalism. I don't know that the other one would be, but there are all those areas. It is a little harder if it's a gray area to prove it's vandalism, right? And just so you're aware too, any claim you make that's not natural disaster related, so wind or hail, they say you can't decide where your house is on a home policy. The freeze now, thankfully, has been declared a natural disaster. Any other claim you make does count against you for 5 years. So it does stay on your record. So you always want to weigh that risk is, hey, okay, yeah, they painted this room and I don't really like the color. I may want to claim as vandalism, but is it worth the $500 to have that on your history when it's going to maybe affect multiple properties and multiple renewals?
We get so many people that come to us, and I'm sure you get these exact same calls, and they're so emotionally angry.
Yes.
The tenant did this, and I want to punish them. And how can I get someone else to pay for this? And I want to claim this. And we try so hard to bring everybody back to a business level of emotion and say, look, this it doesn't matter how good or bad they are for the sake of our decision process. This is a risk versus a reward, and the equation is mathematical. So we need to look at this from a a math orientation and say, is it going to be worth that claim, that cost, and the rise in your insurance and the headache factor to do this, or to simply pay and move on and get it back on the market immediately, because you're not only having the cost of repairing it, which you may or may not get reimbursed for, you're having the emotional turmoil, which is holding you back from your real focus in life, which is getting
Absolutely.
the rent flowing. And so we just say this over and over, people getting emotionally involved. And I know it's emotionally painful and hurtful and stressful when somebody else does something to your home that you used to live in, or your home that you bought for retirement. You haven't even got to it yet. Now it's trash, but it's still business at the end of the day. And so we can listen, we can take all that in, but we need to make a professional business-based decision on what claims we file and what we don't. And it's easier to go through the court system sometimes and let that judgment follow those people until they decide to pay it in 10 years than it
Right.
is to punch yourself, in the gut, or shoot yourself in the foot and start raising your own policies. Sometimes you just got to take the long view to everything. So
Hmm.
tell me one more thing. We've got one more scenario that I think is under this topic, and I apologize. This is just great information, so I'm getting behind on our schedule today. Tenants failing to report damage. So we've had during COVID the inability to enter properties. Usually, we walk the inside and outside of every property twice a year. We look for things. We're not MacGyver. We're not digging behind walls, but we're looking. Do I see something visually standing out? Oh my goodness, there's a water stain on the ceiling. I wonder where that came from. We've not been able to enter properties. And now that we're going back in, we're seeing a lot of things that were not reported by residents. It's a problem. Everybody's angry about it. But either way, the CDC said no go, so we couldn't go. What about tenants failing to report things like water damage? Because that water turns into mold. And now we've got everybody up
Sure.
in.
That's really most of what has to do with the difference in price that I think. I'm not an actuary at an insurance company, but because someone's not going to take care of your property, maybe is, and maybe you have the greatest tenant, maybe they over report stuff. You're like, this is fine. But people typically don't want to bother you or have you think they did something wrong. COVID is such a it's a surprising area for everyone, right? Like there's claims that are still open because they wouldn't let the adjuster come in. And
Right.
insurance companies are kind of having to deal with that. So I can't speak to a 100% this is what it is, but I would say in the most case if you are with a reputable insurance company and this happened during this time, they're likely going to cover it. Now they have very strict writing in their policies. So policies are different. But I think it's a learning experience for all of us to now CDC says you can't go in, you can't force someone in their house, but if it were me, maybe I would have something written in there that's like, if you don't report damage within a certain amount of time, and it's all we can't know when the water happened, right? But if there's mold, it's more than 2 weeks typically, right?
Right.
So I don't know the perfect answer to that. And I haven't had any myself of like claims like that. So I'm not sure. I think more will arise. And water's sneaky. Water does a lot of damage and
It
it's
does. And it hides and it
mhm.
travels.
Sometimes the tenant really doesn't know. So I have
Right.
homeowners, they live there. They're like, I didn't walk in this room for 3 months. I don't know we don't know what to believe. We kind of have to put it up to the claims gods and see what they're going to say back. Because there is the responsibility of the owner to report it in a likely manner, but tenants, it's a different gray area. Now, if there's just water, if there was just water laying on the floor for 3 months, that's probably going to be denied just because it's like, well, hold on. No, but if it's water inside a wall, how do you know when you can see it or know the damage is there?
Correct. Correct.
Well, it's a little harder to answer that one.
So a couple things we've got coming up, and again, I'm just running behind here today, but I'll at least let you run through these because I know these are very important, and we've got these noted. So DP3 versus DP1 and 2.
Yep.
Give me a highlight on that one, and then we'll hit the next 2 points.
You really want a DP3. That's really what you want to look for. And whoever you're talking to is going to know it's the best form. DP1 and DP2s are named peril policies. So what they are they are saying in the contract form, we are only covering the things listed. And that gets really scary because you've got to read that and you're like, oh my God, wait, fire wasn't on here? Or water wasn't on here? You don't want that. DP3s are an open peril form. And what they do is they list, we cover everything
Right.
except.
Right.
And that's what you really want, even on your primary home, on anything. So that's the biggest thing is you want an open perils form of policy, and a DP3 has that.
Perfect. Next point, real quick, ACV versus full replacement cost.
Yep, super important. A lot of roofs are going to ACV in Texas. Most carriers are going to ACV means actual cash value. So
Thank you.
that also, AKA depreciated cost or depreciated schedule payouts. Depreciation and actual cash value is the same term. A lot of people are like, it's different. It's the same in insurance forms. So if you understand depreciation, you've got ACV. I also love to call it like Craigslist value, right? So on, let's say, belongings, hey, you know, you got to go buy a new fridge and it's $500, but on Craigslist you can maybe sell it for $100.
Right.
That's the difference. ACV is they're depreciating the schedule of either your on a dwelling payment schedule, your dwelling, which is the whole house, your roof, which is the number one important thing. Unfortunately, in Texas, because we have really bad roofs and hail and different things that happen, most carriers around the 12 to 14 year age range of a roof, they are going to ACV. It's just important to know. It's important to know. Now, sometimes if you have a roof that you're like, well, it's in good shape, I'm not going to replace it. You want to know what you have on your policy, because a lot of people don't. And they're going to a carrier thinking they're getting this great deal, but really they're putting ACV on a 10-year-old roof. And next year, when you have a hailstorm, you're going to be pretty upset that you have to pay your deductible plus not what it costs to put on a new roof.
Right. Perfect. All right. So next poll, I'm going to pop this up. This is our first one of the day. Is we're going to say, what's your biggest concern about homeowners insurance coverage? Is it the cost? Is it unforeseen items, or is it dealing with claims? And these are kind of interesting. So if you're joining us today, feel free to catch that poll that's on the bottom of the screen. Let us know your thoughts, and then we'll kind of come back from there. I'm going to keep plugging along as folks answer this so that we can make some progress. And I think you guys will be able to see the results of those polls as they come in. So next topic. Difference between homeowners insurance and home warranties. This one's going to be a short, easy one for you. And boy, I love that you're answering it, not me, because it'll help you be a little bit more sympathetic.
Sure. The biggest thing people forget is that home insurance doesn't cover wear and tear. Just like your car, you need a new transmission, your insurance is not covering that. So that's the easiest way to think about the difference between home warranty and home insurance. Home warranty is covering the regular wear and tear on the appliances, your air conditioning unit, etc. Now, if it's worth it or not, that's not for me to say. That is for you to decide if you want a home warranty. And here's where the difference in why maybe your hot water heater would be covered under your insurance versus home warranty. Your hot water heater goes out, whoopsies, it's kaput, you got to get a new one. That could be potential home warranty, or you're having issues with it, or your AC unit. Let's say a tree falls on your AC unit and kills it, or knocks your hot water heater off your house or wherever it is. That's going to be your insurance. So the peril that caused the damage, wear and tear, is not a covered peril on home insurance. It is on home warranty. The peril that maybe caused the tree to fall over is going to be wind or something like that. And so that's where it would fall under. Very similar, if you think about it in auto insurance issues, is why is your car not working? Why did a tree fall onto your vehicle? Or is it just old and needs an oil change or something like that? That's going to be wear and tear, which falls under home warranty.
Absolutely, absolutely. And just from our perspective, since we're on the topic, we track our maintenance request. We track our performance on delivering maintenance to our residents, which in turn means the property is well kept, the value is maintained, and the residents renew their lease, which who knew that was our whole target anyway, was to keep people in place and keep money flowing. Homeowners warranties, not insurance, but those appliance warranties to us are an absolute nightmare. They by far are the biggest headache we have to deliver great service. I could go into 100 stories. That's not our topic today, but I'll just say that property managers that have done this for any length of time despise them, because they cannot deliver great service, and they can't. I know homeowners want to pay and have everything covered, and the truth is, if there was a magic bullet, well, everybody'd do it. There is no magic bullet. You're going to pay, and then you're going to get declined, and they're not going to cover some, and then you're going to have to delay it and fight them, and a month is going to go by while your tenant doesn't have a refrigerator. And so we, as property managers, absolutely, if it's free, sure, use it as a backup, but they are a absolute nightmare for us to be able to maintain your property, deliver great service, and keep your tenants happy, which in turn really means more money than those coverages are worth. So thanks for going over those items. I've got one more poll we're going to pop up here. On the last one, we had really kind of interesting that the cost wasn't the biggest concern about homeowners insurance coverage. It was really the unforeseen items. And this is the reason that I want people to call you or to call someone that is a human that they can be open with and build trust with and have these conversations so that you can say, hey, I know you don't do this for a living, but here's three things I suggest because I do this for a living that you may want to look into. And even if it costs you 20 bucks, you're going to be glad you did. And I pray you never have to use it. That is the biggest fear, which is kind of ironic because when we ask people what they loved and hated about property management, I thought cost would be their number one concern, and it was actually service, which this is about your service. How do you help people and serve them? So I think they believe it. I'm not sure if everybody's buying it yet because they're still shopping with their apps versus shopping with humans. But I know that in their heart, that is their biggest concern is service. So that's great. So let's take a peek. I'm going to go ahead and hide that one, and then we will illuminate our other poll today. Do you currently have both homeowners insurance and home warranty coverage? Since we talked about the home warranty coverage, let us know if you have both of those. Again, home insurance coverage, not questionable. You have to have it. Even if you don't have to have it by law because you have it outright, you have to have it. It's just, you have to have it. And we recommend always speaking with somebody like Stephanie that can help you and guide you. Our job is to make you successful in the end of this, not to just sell you stuff. If that's all it was, then, well, nobody would hire us for anything. But we're here to actually help you succeed. So collaborate with us. That's what we're here to do. The next topic we're going to cover today is exactly that, additional coverages that should be included. Ooh, Texas has had it, right? I mean, we've got wind, we got storms, it's like the apocalypse down here. I don't know what's going on, but talk to me about some of those additional coverages like flood, water damage, liability coverage, mold coverage, all those good things.
So the first thing to understand is water damage is actually the second most common claim in Texas. It's probably about to be the first after everything comes down after the snowpocalypse, what do we want to call it, the freeze here in Texas. It used to be the number two right behind wind or hail. Obviously, hail takes on a lot of roofs, but water damage is the second one. What you need to understand the difference between flood and water damage. Flood is not covered under any home policy across the entire United States with any company, and flood is rising rainwater from the ground. So outside water that did not start within or underneath your house. Water damage is coming from the pipes. So that's really the easiest way to understand it. Flood, Noah's Ark, natural disaster, rain. Water starts within or underneath your house from the piping system. Flood's going to happen if the house is there or not. Water is only happening if there's a house. There's a lot of different areas because water has cost insurance companies a lot of money over the years. There's not just there is traditional water damage, but they also have some other areas they break out. Water damage is just going to be any water that's in your home that causes damage. Now, that's standard on most policies on a DP3, on an HO3, but again, you really want to talk to the carrier. And traditionally, it typically goes up to the dwelling limit. So your house is insured for $250,000, you have that. However, where a lot of people get what they feel is screwed over by the insurance company or don't know what they're doing or don't have coverage or something is because there's water backup, which is really water backing up into the house. That's going to be like an overflowing toilet, maybe an overflowing washing machine, dishwasher, majority of his toilet. This is really common in landlord policies, DP3s, just because people are not using it. It happens everywhere, but they're, doing whatever and not so worried about it. Some carriers will limit it at 5K. I would say like 5 to 10K is a pretty good amount to have. Obviously, the more you have, the better, but typically those are not the largest water claims you see.
Agreed.
Also, water under the foundation. If you have a slab, if you've ever had to deal with this claim, it's terrible. It's even worse to find out you don't have any coverage. And this is when you have a broken or leaking pipe under the slab and they have to take
Nightmare.
and drill down into it. Likely your tenants are going to be pissed off or move out or something's going to happen. Sometimes happens in the garage. It's not that annoying, but maybe you want to give them a credit. I don't know, whatever you do. But they drill down into the slab and fix that part of the pipe. Your insurance does not cover the piece of the pipe. It's weird. It's usually like $100. They put the slab and foundation and flooring back as is. This typical claim is like $7,000 to $8,000.
Yes.
It's really annoying to go through. It's even worse when you find out you don't have any coverage. And so it depends on the carrier. A lot of people get 10% of your dwelling, or you can set it at 10,000. That's my recommendation. But again, and it's not offered on every DP3, unfortunately. So if it's something super important for you, you want to find that carrier that has that coverage. Flood is a separate policy you get altogether. If you are in a floodplain and you have a loan on the property, the only person that's requiring you to get flood is your lender. You are required to get flood to have the loan. If you are in flood zone X, which is not a floodplain, it is really inexpensive. There is a surcharge for not being your primary home. There's two different ways you can get flood policies. It's through FEMA or NFIP flood. That's your government issued policy. The rates are standard. No matter who you go to, the price is the exact same, depending on the coverage you choose. I would say the average policy is like $400 to $500. But you can go up and down. You're going to see basically different pricings with different coverages and deductibles. It's super simple. There's also private flood insurance that is sometimes better, sometimes not. If you have a government-backed loan, you are not allowed to get a private flood policy. It is available if you don't have a government-backed loan, though. And I would always say, take a look. It may be worth it. The difference between private and government-backed flood insurance is they do not care. FEMA doesn't care about your granite countertops. They don't really, unfortunately, care about your loss of use of the home, which I think we'll talk about in a second, which is your loss of rents. That you still have that mortgage, but nobody's going to live there. That's why you see on primary homes, a lot of people living in FEMA government trailers in their front yard, because it doesn't cover hotel expenses. On a private flood insurance, you can add on, because they're private companies, loss of use or loss of rents coverage, which is really important if you are in a flood zone. And we've had a lot of reoccurring flood issues, probably more to come. So that's really the main difference on why I tell people to look at that as well. Sometimes the price is silly. It doesn't make sense to get it because they get to set their rates, and FEMA's just way better at their pricing in that area. But it's something important to look at, is that they do not cover loss of use, and they cap the dwelling on FEMA at $250. Your house may be more than that to rebuild if you are in a detrimental floodplain that will do more than like a foot or two of damage in your home.
So that's all brilliant. I love all that. The only things I want to add to it is we've done this 15 years, 16 years now. We've been managing properties across Central Texas. I've never had a pipe break in a garage floor. It's always in the very center of the house that disrupts the entire house. And one of our long-term best investors bought some houses that were not what I would have recommended to him, but he had them when he came to us. And immediately one of those, they had to not just go through the slab, they had to tunnel, which means paying plumbers to dig. And plumbers aren't cheap. And so they'll have to tunnel to those broken pipes, not just go through the slab. But we've had both. We've had slab entry, we've had tunneling, and they are expensive. And honestly, as much as I hate to say this, it's better most of the time to just go to the tenants and say, look, this is going to be a nightmare. You're welcome to go out of your lease. And if they choose to stay, great. But if they don't, you understand it and you start over, because it drags out forever. And you don't want them battling you the whole time. You have something to add to that?
Yeah, that's where I want to add into that's a really important coverage you want to make sure you have in our policy. Sometimes it's listed as loss of use. Sometimes it changed to loss of rents, depending on the carrier you work with. But that's like, so if it was your primary home, you would say, I can't live here. I'm going to move into a hotel or rent another apartment for a month or an Airbnb or something, that you have that same coverage on a landlord policy, on a DP3. All you do is you simply submit. Now, if they're just being silly because the air is out for a day or two, your insurance isn't going to cover that.
Yeah, well, we're
If
not.
a covered loss where it is you actually really can't live there, or a tree falls through the roof, or if something happens, the freeze, right? I can't live here. There's $100,000 worth of damage, and this is an uninhabitable home. Then they will cover loss of rents too, as long as you have it on your policy. And all it is it's pretty simple. You submit your current lease
That's
and
it.
show what you were getting, because you still have to likely pay your mortgage, or even if you don't have a mortgage, it's your business.
Yeah, and the other thing I was going to add is you mentioned very well in and out of the floodplain. Because if you're in the floodplain, well, everybody expects a flood. But being out of the floodplain does not guarantee you're going to have improper drainage on your property, because either your gutters overflowed, they built around your house and the drainage changed. It was a torrential downpour and it entered through the back door or over the sill, over the foundation. You just never even thought of that as an option. So you can still flood a house, even if it's not in a flood zone, and even
Yes.
if the oceans don't rise 500 feet. A
Yep.
simple hard rain in Texas, which we get about, well, with some frequency, um, can push those waters up in your house. So it is worth looking at that coverage, especially if you're stating that it's relatively inexpensive because you're not in the floodplain.
Yep.
So,
Also, one thing to note, people forget, is you can't call me or your insurance agent. It's about to rain this weekend. There's a 30-day hold on most flood policies, unless you're closing on the property and there's a loan on, like unless you're closing on it with, like, you have to prove the loan. So just be aware of that, that if it's something you're kind of considering or have considered, or you've been really close before on a property, don't wait until the meteorologist says we're going to flood this weekend. It's too late.
right.
So
All right.
just
Yeah, no, I'm glad you said it. I would assume it, but it's always better to say it. So I think we covered the difference between flood and water damage, different water damage on claims. Did we cover the 500,000 liability?
Yeah, so that's a big thing. So there's 3 levels on any policy, including renters, any home policy, of liability coverage. It's 100,000, 300,000, or 500,000.
Right.
The difference between 3 and 5 is sometimes less than $10 a year.
Right.
There is absolutely no reason why you should not be maxing it out to 500. Even if you have an umbrella too, legally, I think in Texas you have to have a 300,000 to get the umbrella with certain carriers, sometimes 100. There's no reason, because if you get sued, you are going to be so happy that you have that extra coverage. It covers your lawyer fees and anything you're held liable for. Unfortunately, if a tenant invites someone over, the likelihood that if they get injured, they're likely going to sue you. You're going to have more money than their friend, most likely. Now, just something else to mention, which I'm pretty sure, Matt, most property managers require it. They require the tenant to have renter's insurance. Please do that and tell them they have to get 300,000. That's not a wild thing. It costs them maybe $10 more a year too. We're talking about less than $1 a month. But at minimum 100, because that's going to kick in before your policy would kick in. So just really good to know. Most DP3s, they max it out at 500. You can't really go up to $1 million. If you can, hey, do it. But get it. And even if you have that umbrella policy, which a lot of people with multiple properties do, underlying amount on your base policy for your house is going to kick in first. So if you don't have to go over to that umbrella policy, it's going to save you, because you might get denied at your renewal next year for your umbrella, and it's just going to increase the cost of your umbrella, which you probably have over multiple homes. So bump it up to 500. If you do one thing, look at your policy and bump it up today.
If you look attractive as a target as well, because you financially have done well in your life, you've worked hard, whatever it may be, it's astonishing how fast attorneys can raise threats and legal fees, increasingly as the lawsuit ratchets up, even if you did nothing wrong. So having that coverage is I just can't say enough about it. Have it. Don't look back, and be glad you have it, and pray you never have to use it. And you feel like you wasted your money. That's probably the best possible outcome that could have happened, is that you wasted your money and you never got sued. I would love that for everybody. So tell us a little bit more. What other insurance services do you guys offer? And I want to make sure that we get I'm going to try to pull up your website while you're talking. I don't
Yeah.
have a link here, and I want to
I
make
don't
sure.
love my website, honestly. It's something that was just a landing page. I'm a talk to people. So you can go to my website though. You can see my cell phone number, which I give out to everyone, and my email address. That's honestly the best way to contact me. Um, Insurance risks are all different. So it doesn't make sense. You can go on online and work up your own quote. Sometimes it doesn't work out, in my opinion. The premiums aren't right. You don't get all the carriers I get access to. So my email is my first name, Stephanie with a PH, at my last name, which is WINANS, the word Integra, INTEGRA.com. That's my website. So if you just do Stephanie at winandsintegra.com, you're going to get me. You can see my contact information there. I write anywhere in Texas. That's something really important to note. I know a lot of people own properties all across the United States. I have great referral contacts that I would refer you out to a broker or someone else. Most brokers, we like to work with the same companies because we trust them. So if you do have multiple policies in different states, we can look and see if it's competitive to, give you those discounts across the board. But yeah, I do, like I said, mostly personal lines, home, auto, umbrella, like we mentioned, toys, etc. But homes are what I write the most of. Condo, primaries, landlords, it doesn't matter. That's what I do.
So if our viewers have any questions, pop those in now. If we don't have any, then we'll get you guys out. I know we drug this out a little bit longer, but these points are so important, and packaging this in one video really gives people the ability, even if they watch it at 2 times speed, to get a refresher, whether they're signing up with the management company, whether they're a first-time investor, what it is, and to have some true answers and context to what's going on instead of, I Googled or I feel. Don't Google or feel. Just talk to somebody who's a member of the community, who's been here for years in. This is what they do. Just like you're great at whatever you do. If it's sending, rockets to the moon, hey, I'm not sending rockets to the moon, but I'm going to ask you how it's done. It's the same thing. While this may seem easy on the surface, there's nuances, and you need professionals just to give you honest advice and say, do this, don't do that. Hey, this one, it's a, give or take, but weigh your options. What do you choose? And that's what you really get by having someone that is in the community, that's established, that really has those relationships. And I know that we're moving to this world of apps matter and people don't. And I'm just going to be the protester to that, because it oversimplifies nuances that come back to bite you later when it's too late and you don't have those relationships. So there are still good people in the world. Stephanie is out there. She's willing to take your calls, willing to give you advice. She doesn't charge to pick up the phone. And so if you fail to place the call to her or email, then I'm going to kind of blame that on you instead of her. But reach out to those resources. There are good people still in Austin. There are people that still care, and we're going to be here for the long term. Stephanie and I are going to be seeing each other 10 years from now, 15 years from now, because we are part of this community and because what we deliver matters. So, Stephanie, I just can't say thank you enough for being with us today. This is something we're going to, as I've been listening to you today, I'm going to repurpose this not just for more information to our clients, but to push this out on the front end of when people reach out to us, because I think this is something they really need higher up in their funnel as they're processing, where do I sign up? How do I get about things? I really think this information is something everybody needs to have, whether they choose to look back at it or not. Is there anything else you want to add, just because we missed it today, that you think would be helpful?
No, I think if anybody does one thing, look at your policy and get you 500,000 liability. Like, you'd be shocked at how many I see of 100,000, and you're going to see that it might cost you $6 for the year, $8. It's not going to be a lot, and it's going to cover you if something does go wrong. And really, just don't be scared to ask questions. From your insurance carriers, from whoever you're talking to, ask them questions and really see what you have covered. And if you have questions, even, I know this insurance can be a big expense when you're looking on taking another property. You can get a quote for it before you purchase it, before you do anything, because it is a cost that goes into everything. So please don't hesitate to reach out. And Matt, thank you and your team for having me on.
Yep. So I'm going to pop our contact information here. They can find us there. Reach out to us if we can help you as well. That is our job, is to help you guys be successful, Stephanie, thank you just so much for being with us. I need to get with you about my personal stuff as well to review it. So I'm going to set an appointment with you. I push our viewers to email you, call you, leave you a voicemail, and set an appointment. Every professional in Austin, Texas is busy. That is a wonderful thing because that means they're successful at business and they're going to be here in 10 years when you need them. They're not sitting around with nothing to do because they're unsuccessful. So propose some times to get with Stephanie that she can really sit and give you her attention. Same thing with us. If you call in, if you need us, don't call in and expect to catch us, at 7 p.m. on a Friday night and have us sit down. It's not how business works. But we are here for you. We are professionals. And we do want to sit down and guide you, but we need to block out some time so that we can give you our undivided attention and really dig into your scenario, not give you quick one-off answers that aren't correct. So thank you, Stephanie, for being with us. All your contact info is here. I really hope people reach out to you just for a consultation, if nothing else. Having your insurance all in one place with one person you can call makes your life simple. Keep it simple. Focus on the things that you want to be doing, like spending time with your family or vacationing or working at whatever you do, and let us take care of the rest, whether it's the tenants, the toilets, the trouble, or the insurance. That's what we're here for. So thanks again, Stephanie.
Thank
Good to
you.
see you. Good to see everybody else, and we'll see y'all next month. Bye-bye.